Hey guys, Camilo from Trending Waves. Thank you so much for tuning in. Today I'm going to do a different type of video. Today is more of a tutorial, or I should say more of an informative video. Okay, I'm used to putting out videos on Elliott wave analysis, predicting or forecasting where the stock or the asset will go to. But today I was asked this question: if I do trade earnings, or how do I trade it, or what to expect. Okay, well, I oftentimes, more often than not, I don't trade earnings only because it is risky. It's unpredictable, and one of three things can happen: either A, the stock will shoot up; B, the stock will shoot down; or C, the stock will go sideways. Right. So if, say for instance, you buy shares, right, you go long on the stock, and the stock happens to crash, right, you're losing 10%. Now you're holding the bag. Or if it goes up and you're short, right, then you have the risk of getting margin call, because when you're short selling a stock, when you're borrowing from the broker, you can lose more than 100% of your capital. So that's also risky. Best case scenario there is that you move sideways, but still you'll be losing, right? So what do? I trade options. I trade options in the when it comes to earnings. But there's a particular, just very particular set of strategies that I implement and I deploy from my arsenal of many strategies that I use depending on the situation. So for earnings, I'm gonna explain to you guys what it is. All right. So have the chart of AMD. As you guys know, AMD will report earnings tomorrow after the market closes. And with that said, excuse me, sorry, let me put this on mute. I like the chart of AMD. I like the chart of Microsoft, Starbucks. These are big notable ones that are reporting tomorrow after the market closes, and Texas Instruments. But let's focus on AMD. All right. So AMD is actually, the question is, how do I know, or how can you tell by how much the stock will move? So the way to do this, let me bring down the options chain if we're going to be trading options tomorrow, right? So this is the options chain. I am not going to review. I'm assuming that you guys have some sort of knowledge on what this what this means, all of this stuff. But what we're going to do here today is we're going to analyze what the market makers are going to tell us, what they think that the stock is going to move. All right, and the best way to do it is through the options chain. So here in Thinkorswim we have two options here, right? We have two items. We have MMM, which stands for market maker, and we have the implied volatility. All right, as you see, I'm hovering over it, it says implied volatility. Okay, so next to the MM, you see that there's a plus and a minus, 6.3. Next here, you see that it's plus or minus 7.94. All right, what this means is that the market makers are estimating that the stock will move either up $6 or down $6 within this week, right? Within the week of the 29th of January, okay, which is 4 days till expiration. So they're telling us that at the current price of $94.13, AMD will move in a range between $6 and $7, right? $6 or $7. Another way to analyze this and confirm it is by taking the straddle price, right? So you take the calls, right? You take the one in the money and then one out the money, right? And you subtract them. Sorry, you add them. So let's take a calculator. Okay, so what you do here is that you're going to add $3.95. That's the contract price for 94 calls, and for the puts, a 94 is going to cost you $3.75. So that's $7.07, right? That's what they are estimating that the stock will move. All right. So let me explain this. So this price. Oh, my apologies. I can't get used to this. Hold on. So I do this. Okay, here we go. So market makers are saying to us that the AMD is going to move either $7.94, $6.30, or $7.07. either in this direction. No, not that. Gotta get used to this. Either up $7 or down $7. That means that if we divide $7.07, right, divide that by 94.13, which is the price at close today, they're saying that within this week, AMD will move 8%, plus or minus, give or take 8%. All right, so now your question is, how do I use this information to estimate where I can play on options, right? So the strategy comes in play here, right? Given that they're saying either between 630 and 790, a $790 move, right? That's 8%. We're gonna expect the move, and because it's earnings, right? The stock can go either up, down, or sideways. All right, so that's the risk. Hopefully, it goes up and the market makers are correct, or it goes down, the market makers are correct, or it goes sideways, at which point the market makers are correct because it falls within the price range that they were predicting. Okay, in order to maximize your gains, if you would like to expose yourself to that type of action, then, and if you feel like the market makers are incorrect, you feel like because of where the chart is and because of how AMD has performing and how much market share they've taken from Intel and IBM, and how within the past few months the semiconductors have ran. So you could say to yourself, no, okay, look, I think AMD is going to go down and the market makers are wrong. So either I play within the range or I play a little bit further out, right, than the range on either direction, up or down. Okay, we're not going to focus on trading within the range. We're going to focus on trying just buying naked calls or naked puts. Okay, so once I have determined that sort of range, right, then I go into the chart, right, and I start looking. I've already drew it here, but what I'm going to do is this. So AMD in the 15-minute chart, right, I'm not analyzing the daily, so I'm analyzing the 15-minute chart because this is going to be for tomorrow, right? The market's closed today, but it is relevant information. So they're saying that is an 8% move. So if I take a measurement, right, from this low to this high, right, to the high over here, we see that is a 4.8, almost a 5% to this high, right? So we can expect that maybe we can see a gap up to $99, or we can see a gap down, right, to let's see, let's do the max, right, 8%, exactly to this range. You see that to the low of wave 2. Okay, so we're establishing this, right? We've established this zone and we've established this zone. Okay, so within this week, AMD can trade this way or this way or just this way. All right, but because we want to play and take advantage of this, then what we're gonna do is one of two things. We're gonna play the range, right? So here you go. So how do I predict this? So using Elliott wave, right, I know that from the low of January 19th, we started an impulsive rally, right? So we can count wave 1, wave 2, 3, A, B, C, down 4, and now we're in the midst of what it could be a wave 5. Again, I believe that because I see here a 3-wave move, right, that this wave 4 squares up to wave 2, so that in fact we are now in the makings of wave 5, all right, instead of another prolonged wave 4 correction. All right, I don't think, and if I'm wrong, hey, look, this is where my strategy is going to come into play, right? I'm betting small. I'm not putting my life savings or my entire account to blow it up. That is ludicrous. That is not advisable, and that is not recommendable. This is not what this video is about. This video is about trying to get some sort of exposure, and this will work for any company that you like. That is, there's the chart setup, right? That's A. The move is within the expected range, B, and that you don't blow up your account, right? You just use a small amount of capital to potentially have exposure to some good gains. All right, like we saw on Netflix. All right, Netflix had stellar earnings, and they those options for that week were trading 1,000+%. So that gave confidence to the market, that, and to everybody, I say, even the Wall Street guys, that earnings could be good. Right, it had a good start. Okay, so now I'm gonna bring back down the options chain. Now that we've established, right, a range, right, of 100%, or down here, right, that's $98, or that's $87. All right. Excuse me. That means that if I look at the options chain for the week of January, right, which we can expect the options to be a lot cheaper. All right, we're gonna go to the calls, right? We're gonna say $98, right? $98, and that's gonna cost us $2.58, or $258, right? At today's close. Who knows how tomorrow it opens, and maybe this number changes. Which brings another point that I did not mention. I normally like to buy this about 10 to 5 minutes before the market closes. Why? Because then we have already seen the information throughout the day and how the stock has played, all right, and how the premiums of these options are going to either decay or jack up, all right. So with that being said, all right, $98 falls within the range of 8%, and this is when I say, okay, I think the market makers might be wrong, given the fundamental news that AMD has had, and everything that it's experienced in its price and its chart and its news and whatever. I think that AMD could go higher, right? That's my perspective. As an example, I'm just saying, not that I believe it. I'm just giving you as an example. So I'll say, this is too expensive. I'm not going to put $258 on a naked option, because more likely than not, it will lose, right? You have a very small chance of winning, but if you hit right, you hit big with a small capital, right? So I wouldn't risk $258. What I would risk probably would be, let's go out to 45, right? $80 would be okay for me to risk, right? So I say that perhaps the market maker is wrong, and that we're going to rally to maybe anywhere between $106, $107. That puts us at where? That puts us way beyond the expected move. All right. So now I look at the puts, and I'm looking at the 87 strike. Right. So 87 strike is cheaper. It's $80. All right. So if the stock were to move down, then that means that the market makers were correct. They moved within that price range. Right. This is in case you don't see it, right? So we're talking about this 87. And we're talking about 98, right? Over here, 98. Okay, that's 8% within what it's currently trading at. But all these numbers will change tomorrow. Okay, it will change as the market throughout the day, as AMD goes up and down, or sideways, or whatever. The time decay on these contracts will take value away from it. So, which is why I suggest that we wait towards the end of the day to see if we could play it, right? If not, then we stay away and we'll just watch. But again, the key is not to overspend, because if you're familiar, and again, this is not a recommendation. I'm not telling you to do this. This is just a tutorial of how I like to view and I like to price out a play for earnings, and what I think the market makers are telling us. So I may not play this. I may, depending on the price, right? Depending on how much they're moved. And I'm not going to ever pay more than what I think the market makers are offering, because if I feel like this contract is way too expensive, then why would I? If, again, to the point that I was going to make before I rant this little spiel, options are designed to expire worthless by the end of the week, right? So within 4 days, Friday, if AMD is not at 100 or above, all right, you will lose $200 if you say, assuming that you bought just one contract. Okay, so that's pretty much it, guys. All right, just do be careful. Never overspend on the options contract, because as I mentioned to you, they are designed to expire worthless. There are other strategies that involve options, like spreads, or spreads like verticals or butterflies or iron condors, that are specifically designed to play out within a range, right? But that's for another day, another tutorial. This is my interpretation of how I will play it tomorrow if I were to do it. All right, I will wait towards the end of the day to see how much the $98 strike and how much the $87 strikes are worth, right? And if they fall within a reasonable price, then perhaps I will consider it, right? And again, because tomorrow is Tuesday, time decay, right? Then we, unless the stock opens flat, right, and there's no major news overnight, and these we should see these trade lower. All right, so that's it, guys. Do be careful, and if you have any questions, just shoot me a message, comment below, and we can talk about it, exchange ideas, because that's what we're going to do as a team. We're going to grow together, and we're going to be patient. All right, so thanks for watching. Please do consider subscribing, give me a thumbs up, and I'll see you in the next video. All right, take care. Bye.